Good Friday afternoon to you. A warm welcome to you from all of us here at ausbiz. This is The Call, 10 stocks picked by you, 2 expert guests over an hour. Friday, the 4th of March, and I'm Nadine Blaney. We have with us today for the full hour Claude Walker from A Rich Life and Mathan Somasundaram from Deep Data Analytics. Top of the afternoon to you both. Mathan, what's happening in your world as we head toward a weekend that will likely prove to be quite volatile?
I think volatility is the least of our concern at the moment. Everything is moving around like yo-yo. I think I'm walking into a Claude's, and I suppose, bear trap. There's a lot of stocks here that Claude would be all over, so I got to be careful on today's show.
Nice.
But I think the macro is going to be volatile through March. I think we've got a fair amount of things moving around. You've got the Fed moving, so I think the market doesn't know where to go, and it's panicking at every shadow.
Yeah, what do you think of the list that's coming up, Claude?
It's an interesting list. There's we're only at the end do we get to one that I like best, so we'll have to wait for that one.
Well, there's a tease.
There's a lot to discuss.
Yeah, and you've done my job for me, teasing the audience. That's TV for you. Let's get into some of the companies that we'll be talking about. I'll just list them for you so you know what's coming. Monroe, Climate Change Leaders Managed Fund. That one's coming to us for Cam. I hope you're watching or listening, Cam. Healthco, Collins Foods, Tesserant, and SDI. Now, I've got to say, we will be speaking with the CEO of SDI in the small caps that comes up right after the call. I do hope you can stick around for that. So what these guys say will help form the basis, I suppose, of my questions to that CEO. Now, for our Friday stock of the day, my producer Libby had a really great idea. She said, let's do something a little bit different. So being inspired by the Women's Cricket World Cup kicking off today and the volatility out there, she thought we should ask our experts for 2 overnight batsman stocks. So a steady as she goes option to hold down the fort while volatility continues to rage. Mathan, let's start with you. What's your overnight batsman pick?
Well, I went with very boring Woolworths. Look, I think Woolies are a great business model. They benefit from the inflation cycle. When you look at what's happening in the retail spending market, it's going from discretionary to staple, and they benefit from that. They can pass on the price rises. All the effects are mostly not to them. It's more to the consumer. And any kind of delayed in their earnings tend to play catch up. So if you're not buying something because of lockdown and so forth, you end up buying it later on when they open up. So in theory, they're a very defensive model. You get a 4% fully franked yield. It's a mega cap. It's the leading player in the supermarket play. What's not to love about it? It's not sexy. It's not going to give you massive growth. But, if you're worried about what's happening in the market, that's the one to buy and just not worry about it over the next year.
On strategy, Mathan, when we enter these periods of volatility, when you can't trust in just chasing the index as much, do dividends and income become more important to you as an investor?
Yeah, I think you got to look at total return. At the end of the day, you are there to make money. You're not there to be right. And to make money, you want to get total return. And if you're getting good dividends, as long as your capital is protected, I think you're in the right place. You just got to be careful where you can get dividends while you lose capital. So I think that's the risk a lot of investors have in this kind of market. So I'll give you a classic example. I think if you look at the big banks, unfortunately, that's the risk that you're facing right now. You'll get good dividends, but you'll probably lose more on the capital. And this is the risk return that you have to understand. So in a tough market, dividends are important, but it's also important in stocks that can hold their market value.
Wonderful. Mathan, thank you. Woolworths, not sexy, but boring can be beautiful. Let's go with you, Claude. I'd be surprised if you picked Woolworths or the big banks for that matter.
Well, I asked for a little bit of a poetic license on this one because obviously it's the small cap universe that I know best. So to the extent that a small cap can be a night watchman, I've gone with a PTB Group, which is a company. Originally PTB was a Pacific Turbines. And that's a company that does servicing for turboprop engines, out of Brisbane, but also from America. And look, you can see there that it's had a strong recovery in share price since the pandemic gave it a whack. But actually, the actual results were actually rather resilient throughout the pandemic, even though its largest customer is in the Maldives, which had absolutely an impact from a lack of tourism during parts of the pandemic. So I think, when I spoke to one of the directors recently to discuss these results, he said, look, over, more than 20 years, the business has performed through all parts of the cycle. So even though he was, very easy to admit there's always a way that, say, for example, inflationary pressures could impact the business, they basically have a good positioning in the market, because it's not very easy for somebody else to go and set up these shops that then service these plane engines, because you need to get a wide range of regulatory approvals to be a company that actually has the essential job of keeping these turboprop plane engines functioning properly, especially when those very engines could be in adverse conditions, like, for example, very salty environment in the Maldives. So they're protected both through a regulatory moat there and also through a know-how moat, because it's not necessarily that easy to optimize these engine repairs, and they have just many decades of experience on that. And because they're the little planes, it's not like they're subject to the massive ups and downs in tourism that we can see. And on top of that, they have aligned board members and pay a little dividend yield, although I would expect that they pay a 4% yield. I expect that dividend will improve over time.
Okay,
and I own shares.
Oh, good. And I noticed that chart, though, as you pointed out, it's done well over the past year. So are you still able to get in now?
I did buy initially at around 76 cents, but I have actually paid up to around current prices, because I still think it is fairly good value, not as good value as it was. I think that if we go back further on a 5-year chart, you'll sort of see that it did drop down a lot when the pandemic hit, because people thought, oh no, these guys are in tourism, aviation, they're going to get hit really bad. The reality wasn't as bad as it could have been. Yes, parts of their businesses were somewhat impacted, but if that plane just has one passenger, you still need to make sure the engine's functioning properly, right? So it only gets hit when the plane doesn't fly at all.
Okay, good one. Thank you, guys. Thanks for playing along. And I had to give Libby credit, of course, because she deserves it, but also because I had to Google what an overnight batsman was. So there you go. Let's move on from that one, shall we?